What's up, good people? Welcome back to Setup Sunday. It's your boy Zay, and it is the week of August 22nd. So we're gonna go through our technical levels and just give you guys some updates and talk about what we need to pay attention to this upcoming week and following weeks preceding. So hopefully you guys enjoy this. As always, I appreciate you guys if you press that like button as well as subscribe to the channel so we continue to grow this thing. But without further ado, we're gonna go ahead and jump right in. And as you all know, we love to start with the Nasdaq and talk about the Nasdaq's movement. So let's just do a quick recap. Last week, the Nasdaq was down 0.73%, so only about 108 points. But we did have some intra-week volatility that we'll take a look at in a second. As you can see at the current moment, we are below the trend line that starts from the open and it goes to the end of the year target of about 16,000. And so we really want to see, are we going to see further breakdown, which brings us down to our 20-day moving average on a weekly time frame, or do the bulls have enough to push from here and get back above this trend line and get us as high as 15,125, right? So let's just deep dive into this a little bit further so we really get a feel of what's going on. So Monday, we opened up and we had a little bit of this hammer type of candle right here, right? And then after that, we had some preceding down days where we came to test our 50-day. And if you know, or if we go back and just look at the weekly, you can see that come around expiration, that's typically what we like to do. So you have August 16th, we come down and did a little bit of a pullback. We go to July. This is where we were on our expiration week. And then that Monday we came down. You go look at June. Again, this is our expiration week and so forth. So we typically come down and retest. So as we get into it a little bit more, what we saw was that, hey, we came down to the 50-day and then we gapped down, but then the bulls immediately stepped in and pushed the price back up. And then we had a great day follow through on Friday. So what we want to see going into next week, now, mind you, next week is Jackson Hole. So the market could just trade sideways or within a certain channel. And that's what it is looking like it's starting to do. It's just going to trade in a specific channel for a little while. But the levels to pay attention to the upside, right? So we need to see if we can close this gap at roughly, that will put us at about 14,770. So we want to see if on Monday we can get some follow through, another day of follow through, right? And if we can close this gap. If we can close this gap and close here, then Tuesday, what we want to see is, do we get one more day or one more push to at least get back to all-time highs on the Nasdaq, which will put us at about 14,895. If we can get there and hold that and get through, then again, I think that clears the way for us to go to about 14,950, which would be a beautiful thing for the Nasdaq. Now, on the flip side, what we have to pay attention to is Wall Street setting us up for a bigger trap, right? So there is a little bit of a gap right here from that Thursday, Friday open. We gapped up a little bit. So typically we may see a retest and we could come back down to this 15 or 14,545. But I would look for us to pretty much hold there. If that level does not hold and we break down further, then more than likely the next level we need to see hold as support would be this 14,421. And if that can't hold, then you can see we'll be headed to this little box area that I have, which really needs some cleanup. It has a few gaps there. So we'll see if we can come down. And that brings us between 14,363 as low as 14,233, 230. So those will be the levels on the Nasdaq that you want to pay attention to. So at the end of the day, though, what we're really paying attention to is to say, hey, on a weekly chart perspective, can we get a close above this 14,893, which would signal that we're going to go higher, right? And then ultimate target would be about 15,125. Or if we get a close below this 14,421, that could signal that, hey, we're headed for some more downside and possibly come test this 20-day moving average, which puts us right at where we broke out from, which is about the 14,175, which is a level we talked about in the past, is that, hey, we needed to get past that 14,175, which was technically our breakout level. Now, the main thing I want you guys to see is that we are still stuck in just this channel right here. We've been pretty much stuck in this channel since about June. as you can see, we really haven't traded, outside of this channel right here. Pretty much buy down here, and then you're looking to sell up here, short up here, buy down here, same thing, right? And so that's the Nasdaq. Those are going to be the levels you want to pay attention to for this upcoming week. Again, definitely trade with caution because we are in such a tight trading zone. So what we're really looking for is that direction, and we can get that by either getting a close above this level or a close below this level. So that's what you want to pay attention to for on the Nasdaq, as far as just getting a feel for where the Nasdaq is going. And with that being said, let's go ahead and get into the triple Qs, right? So for the triple Qs, it goes similar as the Nasdaq, but there's a little bit of some differences that I want to point out when you look at this chart. Number one is that you have these three green. This is really a doji right here, and this is definitely a doji right here. So we really don't have a sense of direction when it comes to the triple Qs. Like, it wants to go down, but it wants to go up. So again, we're stuck in this channel right here. And if I'll go as low as right here, right? So we're pretty much stuck in this channel here. So we need to get above 369. If we can break above 369, that clears us to go to about 375, 377, which would be the target for the bulls, right? Now, if we get a close below right here, so we'll actually do this. So we get a close below 360. More than likely 360 is going to open it up for us to come test this 350 right here, 349.63. You see there's a slight gap, and we have a rising 20-day moving average. So it seems like the Nasdaq wants to come back and come test this 350 before really exploding to the upside. So that's what I'll be, kind of watching for over these next couple of weeks, right? So if we go down to the 1 day, again, it's a very similar pattern of what we saw in the Nasdaq, where we opened up right here at 367. We kind of came down to 363, and we were able to push back up. And then from there, we had the 2 preceding days of down days that caused a dip, and then buyers came in at 360 and pushed the price back up. Again, more of a gap here. So wouldn't be surprised if sometime next week we came back to retest this 363.92. And then if we can bounce from there, we could probably go to the 370. Now, the thing to point out is you can see that the Bollinger Band has really tightened, and it's really in a tight range. So don't be surprised if we stay in this tight range of 362 to about 370, meaning you can buy at 362 and you want to sell at 370, right? And so that's you. I mean, and you could really see it right here if I highlight it. That for the past couple of days, or weeks, really, we have been stuck in this about 2.4% of a trading range, and we've been stuck in this for 32 days. So once we got through, that was what, July 22nd. We go up, we come down, kind of trade in, came down, go up, come stay in this zone, come down, go back up. So this is a nice trading zone that is creating. And again, this is why I say it's critical to see if we can get a close above 369. That'll signal that, hey, we're ready to go even higher. Or if we get a close below this 361, we want to come lower. So that's what you want to see. Either one of those. Once you get that clear break, you know which direction to play it in. And so that's the triple Qs, guys. That's the triple Qs. Now we're going to go on to the SPX. So looking at the SPX, you can see if we go back to the weekly, again, the SPX was only down 0.5%. So we were down 26 points, but the intraday the intraday volatility though was pretty big, because we came down to a low of 43.65. And again, you can see this was a key level. This is actually where we opened on expiration week of July. And then we came down and tested this 43.24. So what we want to see for the SPX this upcoming week is we need to regain 44.70. That will put us back in our bullish flow. And from 44.70, more than likely we'll be headed to about 4,500. So let's actually drill down so you can get a better feel of what those levels actually look like. So the reason why we want to get back above the 44.70 is because that's where essentially this was Monday, and we opened at 44.63. We came down, pushed back up, and then we had our big sell-off. We had a gap down where buyers immediately came in and stepped up and began to push the price back up. Now, again, we knew this gap was here, and we've been flirting with it. So some people would say, hey, does this count as a close because we have a wick here? It depends, right? It really does depend, because typically you want to, have some closure here. So this will be what we'll actually really need to be watching is, okay, on Monday, do we get another follow through where we go and close this gap and push to 44.61? If we do, that would be relatively bullish, and then we'll probably get a push to test all-time highs again. And if we can see if we can push through. On the flip side, if let's say, something comes out and, the market feels like, hey, we want to retest, well, then obviously what will happen is we would probably see us come back, and we have our 20-day moving averages right here at 44.30. So if we break that, more than likely we'll come back down and test the 4,400. If 4,400 doesn't hold, then again, it's another retest of the 43.65. And again, if that does not hold, then more than likely the next level of support would be 43.23. As you can see, we have a little bit of a gap here, and we have massive support within where we had this big bounce from last time, which was right around last July's monthly expiration. This was the 19th, and that was the following day. So those are really the levels on the SPX to watch, again, for the going into next week as well as the preceding weeks. So as I said, what you really want to see for direction wise is you want to see a definitive close above the 44.70, which would signal, hey, we're going to 4,500 and above. And we can get a close below this 43.70, 43.65-ish. And more than likely, we want to come test this 42.80, 4,300 zone again before making a bigger move, So that's what I'll be watching on the SPX. Those are some of the key levels you can hone in on and really use to your advantage. And then what we'll do is we'll now take a look at the SPY. So looking at the SPY did finish down only 2 points. So it was only down 0.5%. So we finished the week at 443. But again, that intra-week volatility was pretty big in that it saw us go all the way from a high of 446.97, basically hit 447, all the way back down to a low of 436. So that was about a 10-point decline. Now, once we did get here, as you can see, the buyers came in and pushed the price back up, and then we had a great follow through. So going into next week, we want to continue to see that follow through. So on Monday, Tuesday, do we have enough juice to push us back to the 447 to test the all-time highs again? If we cannot get through this 447, look for another breakdown, and we will probably come back to 440, because once again, this is just the channel that we've been trading in for a while. So we will look for 440 as support, as well as 435, 436 as support. And again, if that does not hold, then you can see we're more than likely coming down to test around, let me just adjust that to where that little doji is right here. So first level support we want to look for will be about 433, and then possibly looking to close this gap right here. So looking at 431.06 to the downside. So just be cautious of those levels on the SPY as we are going into a volatile period as far as September goes. So it's going to be interesting to see how things work out. But those are, again, the key levels that to pay attention to when it comes to the SPY. So let's take a look at the Dow Jones. So when we look at the Dow Jones, pretty much the same thing. Now, the Dow Jones looks a lot weaker than the Nasdaq and the S&P 500. And that's because the Dow Jones has pretty much been running all year. So when we take a look at the weekly candle, the Dow Jones was actually down 395 points, about 1.1%. And the biggest thing that point sticks out to me is that we closed below where we opened the last week. Typically, when you see that, this is like a bearish, not a 100% bearish engulfing candle. It's more like a hangman is what they'll call it. But we need to be very careful, because just by looking at previous trends, you can see that if we get a under this, what is this, 35,000, right? Say 35,500. Typically, we pull back down to about 34.6, and you can see that is exactly where our low was for the week, which was 34,690. And then we also had a bigger sell-off here. We had a bigger sell-off here and a big sell-off here. So you can see where the bears want to get the Dow Jones in order for them to really be able to push it down. So let's just zoom in and take a look at what we see on a daily perspective. So Monday, we was able to push the Dow all the way to a high of 35,600. I think the last video I did, I think the target I mentioned was like 35.5. So we actually got a little bit higher. But then again, it created a little bit of that hangman situation where we gapped down and then we had another big drop, but then we had buyers come in and buy the dip, right? So they had a good 2-day push. Now, again, the same thing. On Monday and Tuesday, do we have enough of a follow through to where we can push the Dow, or can the Dow push back up to about this 34 or 35,487 level? Because that's where we gap down. So we want to see if we can fill this gap to the upside. So we would like to see a nice follow through to get us back here, right? So if we get to the 35,497, we want to see, do we have enough to get back to push to the all-time highs? If not, again, it'll probably fall back down to about this 35,150, all the way down to about 35,000 even. Again, because we're in a little bit of that trading zone. So again, those will be the levels you want to pay attention to. Then we also have the 50-day moving average right here at this 34, basically say 800. I have 799. So that is what you'll want to watch to the downside. And if these levels give way, then ultimately we'll probably be looking to kind of come close this little gap, which will be about 34,518, basically say 34,500. And it would create a nice a peak, a bounce, a higher or a lower peak, and then we're going to create a lower or a higher low. I'm sorry, a higher low, because now we are going even lower than what we did here. So this is going to be the level we want to pay attention to. If this breaks, then more than likely we're going to create a new low, and this could be the start of something bigger as far as, you know, again, like that 5-10% pullback or correction, not a crash, but just a simple correction, a healthy correction. So that's what we'll be watching on the Dow Jones. So let's get into the DIA ETF, which tracks the Dow Jones. So when we look at the DIA on a weekly, again, it's the same situation where we close below where we open. So we opened the last week at 351, and we've been talking about 351 for a while, and look where we are at, 351.16. So if this breaks, more than likely, you'll see the DIA look to come test this 348 and possibly even come down to about 345 where the 20-day moving average is. And you can see we pulled back to this level a few times to come test it. So this would probably be a pretty solid support level that we would want to see hold is 345 on a DIA. So let's go down to the day chart and really take a look at what we got here. So for the DIA perspective, what we want to see is, hey, can we push back up to this 354, 355 area? And if so, do we hold it, and are we able to push back to all-time highs, which would put us at about 357? If we can't do that, then we'll be looking for a reversal. We want to see some support down here at 348 hold. If that can't hold, then you can see we got some cleanup to do, and this is why we say 345 could be the level we would want to come down to. And if 345 doesn't hold, then you can have 341.87. So the DIA, again, the things that we see is that, hey, it is a little bit of a downslope, but we just need to see, do we have enough juice to push us back up? If not, then, you know, we want to pay attention to those downsides. And the thing that has me a little concerned is just that we have some divergence on the RSI and that our TTM squeeze is losing momentum. So, and the fact that we're going into a seasonally slow period, it is pause for concern. So, you know, you just want to watch it. You know, it's not saying, hey, the market's going to crash, but it is saying you might want to chill when it comes to putting new money to work and just kind of leave the money you have in the market and let it do what it, you know, do what it does. So for the DIA, those are the levels that you'll want to pay attention to. And so what we're going to do now is we're going to go check in on the VIX. We're going to check out the VIX next. All right, guys. So taking a look at the VIX. So as you can see, the VIX finished the week at 18.55. So it did elevate a little bit. And as you can see on Friday, it was down 14%. Now, on earlier in the week, it went up by 20%, and it actually went a little bit higher. So let's just look at it from a weekly perspective so you can really get a feel. So what we have here is that the VIX went all the way to a high of 24, and then it was able to get pushed all the way back down to 18.5. So when you look at the VIX on a weekly perspective, you can see that, hey, it is in a bit of a TTM squeeze and that the RSI is starting to point up a little bit. So going into the week of Jackson Hole, well, we could see more volatility come into the market. So I wouldn't be surprised to see the VIX push back up to maybe 20 and a half, maybe even 21, just as people are uncertain about what's to come out. And then it could get pushed right back down to the 18, 17 level. So when we go look at it from a day perspective, what I would be paying attention to on Monday, and what I probably think is going to happen, is that we do have a small gap, man. You know how we feel about those gaps. They do get filled. So what could possibly happen, or the scenarios we could see play out, is that on Monday, we either gap down and start to, try to close some of these gaps. So we could see the VIX come down to about 1707. Now that would break this 50-day and 20-day moving average, right? And then we'll close here, and then we can see we get another push to 1567. If that were to happen, I would fully expect that the SPY and the preceding indexes would make new all-time highs, is that volatility would be coming out, meaning people aren't fearful, and that would allow the market to go up. Now, the other scenario we could see happen is that, hey, we come down to about the 1784 and hold it, and then the VIX starts to bounce and it goes back to, like we said, about 21 and a half, even back to 20, just on the fact that, hey, you have Jackson Hole, and again, it's just a little bit of uncertainty. And then that would give us enough to kind of come back and retest those levels that we talked about earlier in the video. So that's what I'll be watching closely on the VIX. So as you can, so you can see the key levels that I have here will be 1707 down to this 1567, and then to the upside, we have 20.5 and high as 21 and a half. So that's what you want to watch for the VIX, because the VIX, it's just telling us that more volatility is coming into the market. The big players are making some moves. So definitely want to pay attention to that, right? Now, the next thing we want to be watching is this US 10-year Treasury. So the US 10-year has been all over the place. It's sloppy trading for sure. As you can see, we pretty much looks like we bottomed out at this 1.12. So we got a nice push, a rejection. We came back to retest. Again, we got a nice push up and rejection. So now we got some rejection here at this 135, and now we're back under the 50-day moving average, and we came and retested 1.2. And so we're almost like in no man's land. So what we want to see happen for this is that it's pretty much in consolidation. It's going to probably trade within the zone. So that's going to create this back and forth feel in the market, where some days you got financials and industrials and stuff like that doing well, and then when it's down, tech does good. So this is kind of creating some of this back and forth, but you want to continue to watch this, because once this thing can break out and start going back to the upside, that's going to bode well for like your banks and stuff. And so that's why you'll see a lot of people, real big on financials, because as the 10-year rises, the banks can make more money, as well as, I wouldn't say it would hurt tech, but we would just need to pay attention to how does tech respond to the rising 10-year. It makes money less. What would it be? It makes money more expensive as the interest rates are going up. So that's something that we want to pay attention to, right? But what you can see here is that it is starting to bottom out based on our RSI and our TTM squeeze. Like the momentum is starting to, we're pretty much at max pain. And so we do have this doji here. So again, what we want to see is a clean break, right? If we can get a clean break or a close above this 135, that would signal like, hey, we're ready to start making a move up and possibly go to 152. But again, if we get a break below this 1.2, that actually could signal that, hey, we're coming down to about 1.05, and that wouldn't be good for the market. I think if we were to trend down, that wouldn't be good for the banks. That wouldn't be good for your industrials and materials. And I don't know how tech will respond to that. I mean, we would assume that it would do good, but it just hasn't been responded to the drops in the US 10-year as it has been, or as we would expect it. So again, those are just some key things to watch as we go forward in the preceding weeks. Now, the next thing I want to point out is this dollar index, because the dollar index is also a signal for when banks and institutions are going risk on and risk off. So when you have the dollar going up, that's usually a signal that institutions are starting to go risk off. So when we look at this is a nice double bottom right here. So you got a bottom and a bottom, and this is on a weekly chart. So next week, does the dollar have enough strength to push to this 94, right? 94.14. This is right where the 200-day moving average is. And you can see this is also where previous resistance is. So we've broken through and closed right here where this top was. So this kind of gives us that signal that, hey, we do want to continue to move up. So the levels I pay attention to on a dollar is 94.14 as well as high as 94.61, because again, this kind of signals that, hey, the market could be going into a risk off event. Now, if the dollar index starts falling, then it's the opposite. It's going risk on, and we could see the market rally. So that's why you want to pay attention to the dollar index. And this has a very nice double bottom. So this is a pattern that I'll be watching over the preceding weeks and coming days. Now, I don't really look at this on a day time frame, but I can show you guys. We do have this like reversal doji, so it'd be cool to see next week. Do we come back down and test this 93.10 to kind of create like a coil action, and then from there we would have enough to bounce to the 94. So we could see a pullback come down to 93.10, and then we want to go to about 94.14. As you can see, it did it in the past before. So you have some good history to see, like, okay, what is this trend that we're starting to complete? So we're in this zone now. So this is going to be the trading zone that we want to pay attention to. And how does the dollar index move? So that's the dollar index. Now, just to wrap up the video, we're going to touch on Bitcoin and Ethereum. So let me go down to the bottom. So looking at Bitcoin, guys, Bitcoin been rolling lately. I think the last update we did, we were somewhere around here like 28, 29. I mentioned like, hey, if we get a bounce, we could push up to 50, 59 really, really quick. So we have been on a tear the past, 5 weeks. Bitcoin has been going straight up. And so now the next level we're actually looking to get through is the 50K. So you can see the reason why we're starting to have some problems here is because this is a key resistance where if we can get through this level, which is about 48, then that could allow us to get to the 50. Now we did get through, but you can see at the time of this recording, we are starting to retrace a little bit. Now, the thing that worries me a little bit about Bitcoin is that the 20-day hasn't started to slope back up, but the 50-day has. So I'm thinking that over the preceding weeks, we could see a little bit of a pullback, come back down to about 42.5, maybe 42.7. And then this might be just a good entry for us to then from this 42.7 to bounce to the 50K or 51K that we need. So what I'll be watching for Bitcoin is, hey, do we do a little bit of a pullback down to this 42.7, 42.8, and then do buy or step in to push us back above or back through this 48 and get us to 50,000. If we can't hold this 42, then more than likely we'll see some more downside and we could come test as low as 40,000. I'm thinking that's probably as low as we want to go on Bitcoin. So as long as 40,000 holds, we're still good. If I change it to a line graph, you can kind of see like this is the reason why we will want to see a little bit of that pullback, because we have such a straight line that now what we'll see next is something a little bit like this, like a nice little pullback here, over the preceding weeks. And then once we do that, we get that bounce and we go back to challenge, 59K as we head into, maybe October or something like that. So we want to see that lightning bolt effect where it's up, quick pullback, and then we have another big rally. So that's what we want to see when it comes to Bitcoin. So those are the key levels to pay attention to on Bitcoin. If we go down to a day chart, again, you can see that we are having some trouble at that key level, right? It's starting to sell off a little bit. So we could see us pull back down to about, like I said, this 45. And as you can see, that's what Bitcoin likes to do. It'll make a nice run, quick little pullback, run, quick little pullback, run, quick little pullback, run. So quick little pullback and then run some more. That's what we want to see from Bitcoin. So just watch out to see what Bitcoin does. If it does pull back to this 45, that could be an entry. And then if it goes down to this 40, 41, again, definitely another entry for you guys to be able to get in. Let's go to Ethereum. Same setup, right? So let's go look at the weekly real quick, but you can already get a feel for where it is. So when we look at Ethereum's chart, Ethereum went on a nice 4-week run, and now we're having some trouble at this 33 area. So you can see this is the reason why this was is a resistance zone, because this is where we dropped down, And so this is going to be a hard level for us to push through. But if we get a clean break above 3,300, then more than likely it's going to allow us to make that push to about 3,600, 3,500. And if we can get past, again, this level of resistance, then you see where we're going, probably 4,000. And we could even make a push to the 43, 4,400, which was all-time highs. So Ethereum's chart is looking really good. As far as pullback levels to pay attention to, if we do get a little bit of a pullback on Ethereum, it could come as low as this 2,650 or so, 2,635. That's where our 20-day moving average is. So that, again, that'd be a nice, decent entry for you to get in at 2,500. And from 2,500, we can then bounce and go to 3,600 and beyond. And again, when you look at the chart, you can see why. So we had a nice run. What we want to see now is a little bit of that pullback to say maybe here to the 26, right? And if we do get that, once we get that, we could get a nice bounce, and then that'll allow us to go back to the all-time highs. So that's what we're looking to see form, is a little bit of that lightning bolt action on both Ethereum and Bitcoin. And that'd be very, very bullish for both of those. And so that's really what we're paying attention to on Ethereum. If you can get an entry at this 2,640, that would be great. If it does bust through this 3,300, you might want to, take that, because they're more than likely will push to 3,900 or above. And so those are the technical levels for Bitcoin and Ethereum. These charts are looking beautiful. This 1,700 was a great entry. And I mean, we've been talking about 1,700 since March. As being a great entry. So it's provided a lot of chances for you to accumulate Ethereum at these low 1,700 prices in order for you to really benefit from this uptrend here. And so that is the levels and technical analysis for the week, guys. Again, some of these things take time to play out. So, some of the price action that we've called out, it could be, 2 weeks from now that we see it play out. But that's why I like to look at weekly candles and give you guys kind of like, hey, these are the trends or the trend that we want to see play out over the next couple of weeks. And then for, day traders, you have all the ability to take advantage of the intraday movements and stuff. So you just need to watch it on a smaller time frame. So guys, I hope y'all enjoyed this video. I wanted to make it quick, short, and sweet to the point. Enjoy your Sunday, and I'll catch you guys next Sunday. Stay blessed. Peace out.
Run it up, run it up, run it up. We out for generational wealth. Who else but us? Run it up, run it up, run it up. This is first gen wealth building.